All right, let's talk about the power hour. You know, the final 2 hours of the trading day. For a lot of traders, it's the most chaotic, frustrating, and just plain confusing part of the day. But what if it didn't have to be? Today, we're going to demystify it. We're going to walk through a playbook that turns all that afternoon chaos into real clarity.
So let's just get right to it with a question that I know hits home for a lot of you. Why do your trades, your perfectly good setups, just seem to completely fall apart after 2 p.m.? You know the feeling, right? You've got a solid trend, you've got good volume, everything's lining up, and then bam, the market just rips against you for no apparent reason. It is incredibly frustrating.
And the reason why that happens, the answer, really lies in this one fundamental truth. The market you're trading at 3:30 in the afternoon is a completely different beast than the one you were trading at 1 p.m. It's like its personality has totally shifted. It's not a continuation of the morning anymore, it's a whole new ballgame, driven by a totally different set of rules.
And here it is. This is the heart of the problem. All that data you've been watching all day long, that cumulative options flow, the volume profile, it's gone stale. It's old news. Those positions from the morning, they've decayed. They've been closed out. The afternoon session isn't about following the day's pretty patterns anymore. It is all about raw, unadulterated mechanics. Things like dealer hedging and giant institutional closing orders.
So, to navigate this, you can't just wing it. You need a specific playbook, and it's broken down by time. We're going to start with what I call the 1:50 p.m. reset. This is where we get our bearings. Then, we move into the main event, from 2 to 3:30. That's our prime trading window. And finally, we'll talk about how to survive, and I mean survive, the final 30 minutes, which is known as the danger zone.
Okay, so phase 1, the 1:50 p.m. reset. This is all about preparation. It's about consciously and deliberately wiping the slate clean, getting rid of all those biases you built up during the morning session. Honestly, this one simple step is what separates the traders who make money in the afternoon from the ones who just get completely chopped up.
And this slide really says it all. On the left, you've got that stale data. You know that big bearish flow you saw at 10 a.m.? It's probably worthless now, but it's still sitting on your chart, coloring your judgment. It's creating false signals. On the right, that's what we want, fresh flow. We are only looking at the money coming into the market after 1:30 p.m. This is the only thing that shows us what the big money is actually trying to do into the close.
So here's your checklist. This is what you do every single day before 2 p.m. First, and I mean it, this is non-negotiable, you either delete or just hide all that cumulative data from your screen. Get it out of your sight. Second, you reset your options flow filters to start at 1:30 p.m. Then, you mark the important structural levels, the high and low of the day, VWAP, and this one is crucial, you note the exact price levels of any big dark pool blocks from the morning.
Now you might be asking, what in the world are dark pool prints? Well, think of them as huge private stock trades made by institutions. They're done off the main exchanges, away from the public eye. But here's the kicker. After the trade is done, the price and size get reported. And those specific price levels, they become incredibly significant. They often act like powerful magnets that the price gets pulled back to later in the day.
All right, so our charts are clean, our key levels are marked. Now we enter the main event. This is our primary window to actually place trades, from 2 o'clock to 3:30. And from here on out, we are focused exclusively on reading that fresh, real-time flow of money.
And the biggest force in this window by far is 0 DTE options. That stands for 0 days to expiration. These things expire today. Because of that, their value can explode or collapse with even the smallest price moves. This forces the market makers who sold them to hedge like crazy, buying or selling stock to stay neutral. And that hedging is the engine that creates the sharp, fast, mechanical moves we're looking to ride.
So, how do we trade this? It's a simple 3-step strategy. Step 1. You filter your flow to see only 0 DTE options. Nothing else matters. Step 2. You're not looking for a single big trade. You're looking for bursts. Repeated sweeps hitting the tape, all going in the same direction. That shows real conviction. And step 3. You don't chase. You wait for the price to pull back to one of those levels you marked earlier, like VWAP or a dark pool print, and you use that as your entry trade.
Now, based on what that fresh flow is telling you, the market will usually give you one of 3 setups. If price is grinding higher, holding above VWAP, and you see fresh bullish call flow coming in, that's a classic trend continuation. But if the price slams into the session high and all of a sudden you see a wave of put buying, that could be your fade reversal. And if price is just stuck, going nowhere near a big option strike and the flow is all mixed up, that's chop. Time to sit on your hands and wait.
Okay, now we enter the final, most treacherous part of the day,
the danger zone. From 3:30 p.m. onwards, the game changes completely. This isn't about trends or reading flow anymore. This is about pure institutional plumbing, and you have to switch to an entirely defensive mindset.
The reason for this is that the market is no longer being driven by normal traders. It is now completely dominated by massive institutional end-of-day orders. We're talking about huge ETF rebalancing, pension funds, you name it. They create these enormous shifts in liquidity that can make the price do things that look completely insane compared to the rest of the day.
The biggest mechanic here is something called the MOC, or market on close imbalance. Basically, it's a giant flood of buy-or-sell orders that all have to be executed at the 4 p.m. closing price. Now, the official imbalance number is revealed at 3:50 p.m. But here's the secret. The big institutions, they know which way it's leaning, and they start positioning for it way earlier, sometimes as early as 3:15 p.m. That sudden, wild price swing you see around 3:20 that makes no sense? Yeah, that's probably them.
Now, there is one really powerful signal you can watch for in this window. I call it the Hail Mary signal. You'll spot it when you suddenly see a ton of volume on 0 DTE options that are way, way out of the money with less than an hour left until they expire. This is a huge red flag that dealers are scrambling to hedge against a massive, unexpected move that they see coming right into the closing bell.
And all of this brings us to the single most important rule of the danger zone. This is not a suggestion. By 3:50 p.m., when that MOC imbalance is officially published, you need to be flat, out of everything. The algorithms that execute that imbalance create pure, unpredictable noise that will blow through your stop loss in a heartbeat. Don't gamble on it, just get out.
So what does this all add up to? When you put all these pieces together, it really requires a fundamental shift in how you think about the market. For the Power Hour, you have to stop trying to be a predictor. You have to become a reactor.
And it all boils down to this one core idea. The final hour feels random, I get it, but it's not. It's mechanical. It's driven by these behind-the-scenes forces, dealer hedging, institutional flows, closing auctions. Your job is not to guess what's going to happen. Your job is to learn how to read these mechanics as they happen and simply react to what they're telling you. And the best part is, you don't have to keep all of this in your head. This entire complex strategy can be distilled down into a simple cheat sheet you can have sitting right next to your monitor. It turns a chaotic environment into a clear, repeatable, step-by-step process.
And the final piece of the puzzle is you've got to track your performance using these new rules. A journal that's specifically designed to log these mechanical events, like which way the ODT flow was pushing or what the MOC imbalance was, allows you to see what's working and what's not, so you can really hone your edge in this unique environment.
Which brings us to our final question, and this one is for you. Now that you have this playbook for reading the mechanics, instead of just guessing at patterns, which part are you going to focus on mastering first? Is it going to be nailing that 1:50 p.m. reset? Is it going to be trading the fresh 0 DTE flow? Or is it going to be just learning to safely navigate that treacherous final 30-minute danger zone?